The first question will go to Shelley Hagan, followed by Jordan Press, then Tony Mace. Over to you, Shelley.
Hi, Governor Macklem. This is Shelley Hagan with Bloomberg News. What do you think of the Finance Department's venture into stabilization policy, with Freeland saying she will provide stimulus based on how much the economy needs it? I'm curious how the bank is looking at this. Does it impact your own policy trajectory? Will you have to model it? Or do you have any concerns about it?
Hi, Shelley. Fiscal policy and the supports provided through the pandemic have been absolutely necessary to protect the most vulnerable in the economy, to replace lost incomes, to help businesses deal with a variety of fixed costs. And the stimulus going forward, which is outlined at a high level in the outlook, will be helpful in supporting the recovery. I think at a high level, monetary policy and fiscal policy have been working in a very complementary way. We are guided by our inflation target, and that will continue, but the two have been working in a complementary fashion.
And is the bank concerned at all about the Canadian, or how concerned is the bank about the Canadian dollar appreciation, given the need for exports to keep growing?
Well, I'll begin by reminding you we don't target the dollar. We don't have an objective for the Canadian dollar. It's set in markets. Our objective is for inflation. But the exchange rate is a very important price. I just gave a whole speech on the importance of trade. And clearly the exchange rate affects the competitiveness of our exporters. What I'd highlight right now is that the Canadian dollar has been appreciating, and for the most part, that appreciation doesn't reflect made in Canada factors. It largely reflects a broad-based depreciation of the US dollar. In fact, the Canadian dollar has been relatively stable relative to other currencies, but it's appreciating against the US dollar. And that's significant because the US is our largest export market. And that is something that we do factor the exchange rate into our outlook. And there's no question this appreciation of the US dollar is on the margin making our exporters less competitive. And so it is something that we've mentioned in our last couple of press releases because it's material. It's on our radar screen. That's the message.
Thanks, Shelley. Jordan?
Good afternoon, Governor. I want to just ask you something about vaccines. And obviously, we're seeing the first shots rolling out this week in Canada and more on the way. I'm just wondering, from your perspective, what does it mean to you, and maybe mean to the outlook going forward, to have these vaccines arriving sooner than you had originally anticipated?
It's very good news. I guess what I would underline is that since our monetary policy report in October, quite a lot has happened. At a high level, the outlook is evolving broadly as we expected. We expected a very strong Q3. That's happened. There's actually been even a little bit more momentum than we thought going into Q4. And looking, towards the second half of the year, the arrival of new effective vaccines is a very positive development. And we're starting to get a sense of what the rollout for those vaccines might be. And certainly as vaccines become widely available, Canadians are going to be able to get back to more normal activities. We're all going to feel a lot better. It's also going to be good for the economy. Near term, though, the situation is clearly looking more difficult. Infections are spreading. Provinces and jurisdictions within provinces are increasing restrictions. The restrictions are getting tighter. And even though we went into the fourth quarter with a bit more momentum than we thought, we do expect that that's going to weigh on growth in the first quarter, as I just highlighted in the Q&A after my speech. The first quarter could even go negative. But when you look out beyond that, as you highlighted, we now have a clearer timeline to when we're going to get out of the pandemic, and that's very positive. So you've got negative near term, more positive medium term, and the situation is evolving fairly quickly. As we, in our January monetary policy report and leading up to it, we will certainly be evaluating those. We will know by the time we get there, we'll have seen more about the evolution of the infections, and I expect we'll also know more about the rollout of vaccines. And we will factor that out into our January outlook and whatever decisions we take in January.
And I'd just like to ask you also going forward, what are the metrics that you're going to be looking at, aside from maybe the inflation rate, to decide whether the economy requires more stimulus or maybe whether it's had enough and you need to tone that down, and not just maybe monetary, but fiscal stimulus at the same time?
Well, you're right. Inflation is our beacon. That's our guide. We're trying to get inflation back to target. We're looking at a whole range of economic indicators that will influence inflation, but clearly the biggest thing right now is there's a lot of excess supply in the economy. There's still, roughly 575 Canadians who lost their job during the pandemic and have not got it back. And we've said for some time it's going to be an uneven, a choppy recovery, and I'm sorry to say, but we're seeing that chop right now. The rising infections, the rising restrictions are going to produce, or we're going to see some chop. So the evolution of the amount of excess supply in the economy is going to be a critical factor, because in order to get inflation sustainably back to 2%, we've got to eliminate that excess supply in the economy.
Thanks, Jordan. Tony Mace.
Yes, thank you, Governor. Just to follow up on the first part of that last question about the upside risk to the economic outlook in the second half of next year, given the good vaccine news. How much of a risk is there to the interest rate forecast that follows on from that? If you get the vaccines rolled out in the first half of the year and the consumer starts to bounce back in the second half, and exports, as you mentioned earlier, and other investments, what would that mean for the interest rate outlook?
Well, I really hope things break to the upside, but what I want to underline right now is that there are upside risks, and certainly the development of vaccines, there is a scenario where the recovery is more rapid than what we have laid out in the October monetary policy report. At the same time, the near term, the downside risks, the near term, are looking more serious. And particularly if the economy slides back, we were in a very deep hole. We've climbed a long way out. If we slide back, we're going to have further to get out again. So, those are the sort of things we have to evaluate and assess going forward. And I think right now it's too early to tilt either way, and we're getting new information. New information is arriving rapidly. So we will be assessing this and taking our decisions in January.
If I might just follow up on the new information that is arriving rapidly, are you referring to new information that is showing the near-term negative effects of the second wave?
I would actually highlight, both information. So, on the negative side, we are starting. So if you look at the aggregate numbers, for example, you look at labor force growth, labor force survey for the last couple of months, overall, in aggregate, job growth has continued. And in fact, as I indicated, it's been a bit more momentum in the fourth quarter than we were expecting in October. But if you look underneath the hood, you can see, for example, in recreation and culture, in food and hospitality, the last 2 months, employment has fallen in those sectors. So you are starting to see the effects of the restrictions, and as those restrictions mount and increasingly bite, you'll probably see more. So yes, we will be getting more information on that. On the vaccines, we're going to be getting more information on what the rollout looks like across the country. There's more than one vaccine. There's rollout strategies across all our provinces, and as those become clearer, we'll be able to feed that into our outlook.
Thanks, Tony. For reporters who are late in joining the call, if you have a question, let us know by sending a quick email to communications@bankofcanada.ca and we'll put you in the queue. Pour les journalistes qui se sont joints à l'appel avec un peu de retard et souhaitent poser une question, envoyez un bref courriel à communication@banqueducanada.ca. We will go to Julie Gordon next, followed by Greg Quinn and Paul Vieira. Julie?
Hi there. Thank you for taking our questions today, Governor Macklem. I'll probably take you back where we've kind of been already, but you said today that the vaccine news is providing reassurances that normal activities can resume sometime later next year. Does this change your views on when the economic slack will be absorbed, meaning will this happen sooner than 2023?
Well, I think I've already answered that question. I think it's premature to come up with an answer to that question. We are assessing. We will be assessing, and it'll be feeding into our full outlook that'll come in January. As I've highlighted, there are the vaccines are a very positive development, and as you just said, the timeline to when we can start to get back to more normal activities is becoming clearer. Having said that, nearer term, the news is more negative. And one of the things we've talked about repeatedly and are quite concerned about are what are the longer term scarring effects of this pandemic. The longer it goes on, the deeper it is, the more potential there is for more durable longer term consequences. So if the recovery were to stall, if it were even to fall back, the potential for those scarring effects becomes more serious, and that could prolong the recovery. On the other side, as you've highlighted, the vaccines are certainly a very welcome and very positive development.
Thank you. And just on the Canadian dollar, it seems like this was sort of your strongest expression of concern we've heard yet. Why did you not include similar comments in the policy statement last week with the rate decision?
I don't have it in front of me, but I think there was a sentence in the rate decision that, yes, we're not going to give a 5-minute. It's a 1-page decision. We highlight what is prominent, and there was a sentence in that decision along the lines of Canadian dollar depreciated, largely reflecting a broad-based depreciation of the U.S. dollar. And as I said earlier, we highlight in the press release the things that are on our radar screen, the things that are material that are affecting our outlook, and that's why it was there.
Thanks, Julie. We'll go to Greg Quinn.
Hello. Hello. A question about consumer finances and the housing market. Clearly this year, a lot of foreign immigration has been cut off, and yet the housing market has boomed. So I'm wondering if that's a bit of a sign that any of the strains or the housing boom is really driven by domestic demand and not by people coming in from other countries or foreign speculators.
Yes, I think you're right. I think it is largely driven by domestic demand. You're seeing. I would highlight a number of factors, Greg. First of all, people were unable to buy a house for a few months, so there was a big pent-up demand, a lot of catch-up from the period when we were in full lockdown. So it's not entirely surprising that you saw a big, very strong rebound. The second thing I'd highlight is that when you're looking at the housing market, it's clear that the pandemic has shifted people's preferences. So condos are looking softer. The strength is particularly in single-family homes. The other thing that's interesting is that while the strength is pretty broad-based across the country, it is not as focused in the highest price markets, Toronto and Vancouver, as it was previously. It is more spread out. In fact, some of the biggest price increases have been in markets more like Ottawa and Montreal, for example, where prices are not as high. So there's a fair amount going on. There's no doubt that very low interest rates, forward guidance that is provided confidence that our rates are going to stay low for an extended period. I have no doubt that that is a factor supporting the housing market. And frankly, that's part of the way monetary policy works. That's part of the way it puts stimulus in the system by encouraging spending, particularly on credit sensitive, on things that are often bought with credit.
Secondly, a question about the bank's governance itself. At the moment, governing council has no women or visible minorities. Isn't this out of step with the times? And is there anything you plan to do about that?
Well, look, thank you for raising that. Diversity, it is important that the Bank of Canada reflect the Canada it serves. Recently, internally, we launched a new diversity and inclusion strategy. And in that, we set targets. We have targets for the whole bank, but we also set targets for senior leaders, what we call senior officers, roughly the top 100 or so people at the Bank of Canada. And we have a strategy with it to make sure that we realize those targets. I would say a couple of things here. First of all, it's important that the bank attracts the best talent, and that means we need to be attracting talent from all places, all cultures. If we're missing parts, if we're not getting access to some parts, we're not getting the best talent, and then we need to develop it. The Bank of Canada needs to be an inclusive place where people can bring their whole self to work. I mean, that's how you're going to get the most out of your employees. And there is consistent evidence across many companies. So that is a priority, and thank you for raising it.
Thanks, Greg. We'll go to Paul Veer of the Wall Street Journal, and then the last question will be from Dave Parkinson of the Globe and Mail. Paul?
Good afternoon, Governor. On the vaccine front, will the early authorizations and availability prompt the bank to change its previous guidance about vaccines and other medicines would be widely available at mid-2022? Why didn't you suggest a change to that today? Is that something that's likely to change in your January MPR?
Well, we'll be getting more information between now and then on the rollout of the vaccines. But yes, I think on the margin, well, we'll certainly have to look at our assumptions, and the arrival of vaccines has come on a more optimistic schedule, and that's great news. As I highlighted, it's not the only bit of news, but that is certainly very good news.
And I just want to ask, I believe it was in the Q&A session, you were asked about the elevated levels of savings. You suggested some part or some of that savings is being used to pay down debt. Do you think the pay downs that are happening, how much is that mitigating the previous vulnerabilities that central bank identified in terms of household indebtedness being a concern for financial stability?
Well, it's certainly helping, and I think it's hard to. I don't know what your rating scale is, but it's certainly helping. I think the other thing I highlighted in my previous remarks is that the most important predictor of somebody making their mortgage payments is that they have a job, and there's a real alignment right now between the need for monetary stimulus and financial stability, because monetary stimulus is lowering interest costs for Canadians. If you've got a mortgage, as you renew the mortgage, the cost of that mortgage is going to go down. You can use that extra money to pay your mortgage down faster. You can use it to buy other things. And the other aspect is by lowering borrowing costs, we're supporting the recovery. We're helping getting Canadians back to work. So, there is a certain alignment. We've highlighted this risk for some time. Governments across the country have taken a number of measures to manage that risk. The OSFI's B20 mortgage stress test is a good example. And going forward, it's going to be important that we continue to manage that risk.
Thanks, Paul. We'll go lastly to Dave Parkinson, Globe and Mail.
Oh, hi, Governor. Dave Parkinson at the Globe here. Just going to go back to the near-term outlook. I mean, you've talked about the possibility today. You've talked a couple of times about the possibility of negative growth in the first quarter. The Bank of Canada was never expecting very much growth in the fourth quarter. I'm wondering, first of all, if you can give us an idea if you think that there's a possibility that we could go negative in the current quarter. And then maybe give us an idea, give Canadians an idea of what sort of scale you might think a negative turn in a quarter might be. I mean, obviously, we saw some really ugly quarters earlier in this year. I just want to see if we can give an idea if we're talking about barely tipping over into negative, or if we could be looking at a sizable negative in the quarter.
Okay, well, let me start, Dave, with the fourth quarter, because we actually have some data on the fourth quarter. So in our October monetary policy report, I believe we had 1% growth in the fourth quarter. So the data that's come in, so obviously 1% quarterly at annual rates is 0.2 quarterly. So it wouldn't take much to tip that into negative. Having said that, the data that has come in since October has shown more momentum in the fourth quarter. So the chances of it going negative are less now than they were in October. I don't have a new number for you, but I think it'll likely be bigger than 1. With respect to the first quarter, that's a bit tougher. We obviously don't have any data, and the restrictions, the infections it's a very fluid situation. I will say that with respect to the negatives, we're certainly not expecting. It could be negative, it could be positive. I think if it's positive, it's likely going to be a small positive. If it's negative, I think it'll be a relatively modest negative. We're not talking anything like the second quarter.
Or even, I mean, sorry, this is sort of an aside to that one as opposed to a new question, but you say you don't think it'd be anything like we saw in the second quarter. Could it be comparable to what we saw in the first quarter of this year?
Well, I mean, I think I don't have any more than I told you, David. You know, it could be a small positive, could be a small negative.
Okay.
Okay.
Sorry, go ahead.
Well, that's all the time we have for Dave. So that concludes our press conference. Thanks to you, Governor, and thank you all for joining us today.
Thank you all, and we'll look forward to a better 2021. Have a good holiday. Thank you.